Best people, it's the Crypto Sniper coming straight at you. Yes, and I've got a really good video for you today, and I'm going to give you really important information. You need to watch this one, and you need to share it to many friends. Hit the like and subscribe button. What am I going to be telling you in this video? I'm going to tell you the 5 reasons. I think there's 5 fingers on here, hopefully. 5 reasons why this is going to be one of the largest moves, bull moves in crypto coming up during the course of 2024. That's right. Why it's going to be the very biggest fundamentals. Indeed. How you might think it's already a big market. It's difficult for it to move as much as it did way back then. It's going to move extremely far, further than many expect in many ways. Why? We're going to cover those 5 reasons, and then I'm going to give you one core reason why you might end up watching it happen and missing out 100%. In short, you could be left entirely on the sidelines in the biggest bull market, the broadest, strongest bull market that is coming at you. You could miss out. You're going to make this one key mistake, and it is going to break you. It is going to break you before all the best Christmases, all your Christmases in one year get a chance to arrive. So let's cover those reasons. First of all, I'm going to give you the flyby across the top. Many people sometimes don't like to watch the full length of a YouTube. They say, oh my God, this is like 30 minutes long, or it's 50 minutes long. God forbid. I don't have that much time to really learn and understand. Everybody is a TikTok generation guy. So cool. This video can be over for you in not much more than a minute and a half. I'm going to give you a whole bunch of reasons. Then I'm going to leave a really special thing for the people that will hang on at the end. But that'll be up to you. So one core reason, number 1 reason why this will be the bull market is definitely on its way in certain senses, bar, as I say, the danger I'm going to be referring to, and that core reason is all the associated equities that are directly engaged in crypto are already reversing and showing. Now you might say, well, that's already the case with Bitcoin too. Yep, but there's many cryptos that are quite low and heavy. The related equities, and we're going to take a look at, when we drill down on this one, Coinbase, and why we are calling it a bull, and how actual far. So those that have the patience beyond the 1 minute and 30 guys are going to find out the target that we have for Coinbase as an equity to the upside. And then Microstrategy as well. Why that equity? We're going to look at that one. What technical structures are engaged there? And we're going to do the target for that. So on a crypto channel, you're going to be finding out all the best news in terms of 2 equities to start off with as point number 1. What's point number 2? As to why crypto is going to do a whole bunch better, and the bull market is coming for 2024, and it could be one of the biggest and strongest. Point number 2 is the media cycle towards crypto has changed. The media cycle towards crypto has changed. I'm going to drill down and give you more detail on that one as well, but we've got to respect the 1 minute 30 guys, and I'm already a minute in. So point number 3, I will be detailing that a lot more, by the way. Each one of these points we're going to drill down in detail. Point number 3, the debt devaluation period. The debt devaluation period is here, and as much as you are deflating the old world money, the more you're going to need to inflate the new world money that it's moving into. In short, there is right now an arching over. We'll delve in much more detail on that one as well. So the debt devaluation is absolute nitroglycerine for the coming crypto bull market. We'll deal in that a lot more as well. Then the halving cycle. We're going to do a little bit of work on the halving cycle, and we're going to show you why this time, more than any other time, this particular halving cycle is going to also have fuel. And we're going to point out a very interesting coincidence. So far, you've heard from me, the associated equities are reversing as point number 1. The media cycle is turning as point number 2. The debt devaluation is going to be nitroglycerine for the crypto markets in the real world. What goes down in the real world will need to inflate somewhere else. There's this beautiful natural thing about DeMartini. Whatever is suppressed in one place sees other things arise. That's right. There is always a balance in nature. You can't push down in one place without it going up somewhere else. Point number 4, as to why we covered, is the interesting aspect surrounding the halving cycle and its synchronization with something else, which is going to add turbo juice to this. So point number 4, the halving cycle, why this halving cycle is synchronized with something else, something many people have missed and no one is talking about, apart from a few people that I engage with have noticed the same thing as me. What is that we're going to be telling you? And that synchronization that is going to give extra fuel to the surge that needs to come there. That's point number 4. Point number 5 is the yield curve inversion and its reversal. We will be talking about that aspect that has only happened very recently in a very minor way during CV19, and we actually are in the main example of it happening right now, and why that is going to add turbo juice to the coming inflation in the crypto market. So by billions of market cap, this next inflation by scale, if not by percentage, will be substantially larger than the previous and the one before it and all others. Good. There's your 5 points. For those that are impatient, you can go. If you're confident you know all that goes into it, we're going to be getting a lot more detail on each of those points. And of course, the final one, why you will have a danger. There's a great danger why you will not participate. That is for the people that wait to the end. And there's one key thing that is going to floor you, and you will not be able to participate, and you will be the most FOMO'd, and you won't have a penny to your name to participate. That will be the trick that we will be displaying to you and showing you in the charts right now when we head to them. So let's go straight to the charts and deal with point number 1. Point number 1 was the associated reversal of the equities that are directly engaged in crypto. Right, let's have a look at yours truly, Coinbase. Coinbase. Here's its amazing IPO and listing. It went straight into, it listed, of course, very close to a high in crypto. And of course, it went straight down, broadening structure, down, some more. And then a spiller, an absolute thriller. Wasn't that fun with the whole FTX saga and the 3 arrows and all of that? Great. So what is Coinbase looking like now? Well, you might notice that we've drawn our usual characteristic blue line, a light blue, teal blue, the finest of little boy PP teal blue, that runs through the $110 mark, and that is for us a reversal of a slightly complex structure. We teach you about complex head and shoulder structures, and we implement them, and you watch us implement and recognize them. It's all detailed in amazing materials. Just hit that very first link in the notes below and book a call. What has happened? Well, let's show you the shoulders first, because some people battle. A super spiller once you pass that 110 mark, a lot of momentum to break the $1 mark. Of course, can't even remember what it listed at. It might have traded on the first day nearly as high as 5, but that seems most of the candle bodies are sort of around 387, 460. But I am on, by the way, a weekly chart. So that is your left shoulder, super high volatility. This, my friends, is your right shoulder, which is far more chilled and rounding out, and coming up with momentum towards, you guessed it, $110 mark. Now, I'd normally go with $100, but there's a reason why I'm going my most aggressive neckline. And that is because my expectation is exactly as per the heading of this particular video. Crypto is absolutely going to run it. It's going to run it hard, and in billions market caps by cryptos, it's going to make new territory and ground. And in fact, I think the last bull market was almost a disappointment in terms of scale. You're going to get a number of nitroglycerine turbo juice to the overall billion market cap movement that you're going to that we will expect. Of course, the head slightly complex. I marked it out in green because it's positive and it's a reversal, but that starts from here down, and then of course here down. Bit of a bull flag, did you notice? Yes, to put in that poll. Let's actually take you in a little deeper. I'm on the weekly. Let's go to 3 days. Let's go to 3 days and have a little draw on this a little bit closer. It's worth doing properly, he says. It's worth doing properly because these are the equities. We'll be looking at Microstrategy next, by the way. So you can see from the overall structure, very strong off the low here, super strong, big like that. Flag like over there, and then like that, boom boom bosh, and then a flag pole there that took you again to the 110 mark after that spike and dump that was there. So this is all part of your overall head. And then of course, rounded bottoming, the lowering of volatility in the right shoulder, and the cupping behavior, which is showing basing, marginally lower lows until failure to make a new low and reversing to the upside, and actually quite firm at the moment, going at 108, tells us that you could be indeed getting ready for a triggering event, which we'd call a trade through the 110. Where is that target? We were talking about targets. We've lost the 1 minute and 30 second, guys. 387. So that's going to lead to great trading volume, obviously increasing, improving. All the assets being held are also going to appreciate. The perception of exchanges are going to improve, and Coinbase's legitimacy, and as one of the key players in there, is going to benefit from the crypto market having another green season. So that's the beautiful world of Coinbase. What about MicroStrategy? We've done MicroStrategy as well. Now, the interesting thing about MicroStrategy is it's more of a proxy play on the value of Bitcoin. So there is a difference. One is an exchange. It trades all tokens, many of the majors, and it's not specifically Bitcoin as MicroStrategy is. MicroStrategy said Bitcoin is the new currency. It is the world. Everything else is just bad copies thereof or doing other things. And this is your new money for the new system, and that is MicroStrategy. Now you can see from when we had the highs of Bitcoin, which probably tapped out round about here. We should actually check that out, put the Bitcoin chart below it. Let's indulge me while I do a little bit. Was that the absolute high? I think it should be for Bitcoin. 21k. We put Bitcoin at the bottom there. Let's go Bitcoin, put him on BTC. We want Bitstamp because we need a bit of history. And let's do it. There we go. So what was the dates? Let's get some real estate back here. So MicroStrategy, blow off top in and around the 8th of February 21. It's interesting to note actually that the higher Bitcoin price over there, the equity was already giving up ground. Very, very interesting. Very, very interesting. How many of you were aware of that? I actually wasn't, I have to say. So actually MicroStrategy, the proxy for Bitcoin, illustrated what I've always felt, that the 64 was the momentum high, 69 was an echo boom of late retail guys coming in, and that the die had already twisted and changed for crypto in terms of that, and as a result we should be a little bit circumspect about the 69k high. Marginally higher high of course was fatal, and that was MicroStrategy, and it really did overperform. So yes, so that was the initial 64k high. Let's go back to analyzing. We can leave the Bitcoin chart on actually for a bit. It's quite fun. But I will compress it a tiny bit. Big broadening structure. You can see the bear flag rally there. That was the 69 high, a strong sell-off. Note how this 345 level, we think the 345 level is very interesting on MicroStrategy. So this is a bit of an equity analysis, by the way, that you're getting as a result of its role in crypto. So I know it's Crypto Sniper, but this is really interesting. Really, really interesting. You bounce there again. So that was resistance, pullback, and then broken with momentum. Typical interplay. I would say you could call it the 350. I'm sure it's not too far away from 345, but that's our chosen number for right now. There you get another bear flag rally. We've spotted that, we've drawn it, and that's another rollover. You could have got out of this equity. At that point, of course, Bitcoin was already heading down. It had come from 69 highs and was in the 37s. Then the spiller, the absolute thriller, all the way down, 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 down. You've got a broadening structure up into there. You sell off again out of that. I should have drawn that with straight lines. Looks messy. We're trying to be tidy on our charts here. Super, super tidy. A little bit of a broadening. You break again. You go into eventually a channel to the downside, and eventually you start to square up outside of it. What happened? What happened? What are we highlighting? So let's say goodbye to Bitcoin. Let's get the full chart again. Go back to the single chart. And let's have a look over here. What actually happened? In fact, I'm going to take it off 3 weeks, a full week, 7 days, and put it on a 3-dayer. Just to give you a little bit more perspective and detail, and we're going to take a look into this part. So the call technically for this reversal, and once again you see our teal blue line, is that this is a double bottom to there. You can see it's very close and similar to that level there, and that is the W that brings you back into there. So the diagonal of this downward channel. Now, you were quite slow on the return move, initially quick, then a pullback, and then you made it up there. So we were high volatility into the down leg. That was, of course, the events of FTX, 3 Arrows Capital, wet the bed, panic, snapback, rally, and bounce. Now, I just also want to highlight this. Everything I'm doing here, because this is quite long scale, we're above a daily time period. But if we just go back to the regular time frame, just to show you how big these moves, I'll take it back up to weekly one more time, how much lower you are, how big a drawdown this is. You know, these numbers, sometimes you lose the perspective of these numbers. That was up at $1,322. That traded down at 136. You know, welcome to your 90% pullback. That was quite gut-wrenching. On that roller coaster ride, I think I might have puked a couple of times in those bends. I can tell you that much. Anyway, so double bottom, calling for basically the 900 level to be taken. So that's the, go back to that log scale chart. It's kind of distorting if you don't truly realize. So that's why I wanted to show you the regular. And I should have done the same for Coinbase for you. So W bottom reversal, limbered up, broke the key level with momentum, natural pullback, quite typical, floundered for a while, but in a channel now, moving higher. Now the one cautionary I will probably say in all of this is that I don't think it's necessarily a clean sheet to be plain sailing drive. We will be coming back to that very key point in the one danger that's going to see you, that's right, you, look into the eyes, I'm talking to you, be sitting on the sidelines and not making the mega pumpermentals money. Don't cock this up. Don't goof. I'm here to help you and try keep you in the game, and that's what we're all about. Don't get caught out. And I will be dealing with that in due course after the 5 points as to why this is going to be one of the biggest moon session cycles. So that is a rising wedge. Rising wedge. We put our splitter in. We're the only ones who does that. There's good reason to. Click the link below to find out more about all our trading techniques, how we do complex head and shoulders, inverted and normal, and why we are essentially continuation traders. Spitting on my, stumbling and flumbering on my words here today. Rising wedge. So you're at the top and you're at a kind of a level which I would just say is not the right weighed in moon point. You should have been on the return move on the re-break, any point over here, or in the initial break there, which happened to be on the splitter of this rising wedge. And this happened to be along the basing ascending grind line, even better than the splitter of the rising wedge. Now, we talk about 3 impulses to a wedge. What you might find, the foundational one is there in the W bottom. And you always have a big bloated rangy second one. You don't always, but it's a very common attribute. So a lot of the volatility of the first bounce and shake it all about tends to get quite bloated, and it takes a while for that post-traumatic stress element of the violence to shake its way out, and you end up with a long extended bloat before you get back to being snappy again. Now we could have a return just to the splitter, we could have a return all the way here, but once you're in here, if you break this top to the side, you could have a type 3, and apart from a down move, you could go all the way up. So rising wedges can melt up, especially near cycle lows, especially with a bull market, especially with the possibility that Bitcoin could go higher. However, there is a set of circumstances, refer back to the end of the video, on the one danger that will ensure you miss the entire cycle and come out poorer than even you started. And I'm going to be giving you a bit more on that. But there is also a possibility that you get first a clearing out dip. We'll cover that in much more detail as to why that possibility exists. Okay, so the equities right now guys, that are related to crypto, and the proxies are largely bullish, and MicroStrategy more so. Bitcoin dominance has ascended. We pointed that out. We said you were going to break out of that square box of lows many times. We've covered that in previous videos. I don't want to recap, but we highlighted that Bitcoin dominance was going to ascend first, and you're around about 52.5 in an environment where it's gone actually as high as 54, and most of the time it was in the mid 40s in that bottom box before breaking out. We covered that in previous videos. Go have a look at our legacy videos. So that is point number one. The equities are showing it. So this is essentially something that has crypto exposure, but is actually playing in a different market effectively in terms of where it's being valued. And even the people that trade equities are saying this is potentially going to turn. These are a different crowd of people to the teenagers and spotty teenagers in the crypto market, although we're getting more of the institutional folk involved, obviously, in crypto. We'll come back to that on point number two. So here we go, point number two. Let's leave these charts for a while and go to an article. So the media cycle regarding crypto is turning. The media cycle towards crypto is turning. Now, before you think, oh, that's them coming around, let me just explain to you. Crypto was created by the dark states, our Zionist friends. It is the controlled opposition. Everything they do is controlled opposition. JP Morgan saying it's terrible. Warren Buffett's little sidekick mate saying it's barbed wires, babies in barbed wire, and other ridiculous comments that are absolutely incomprehensible, are all bred haters. They're meant to hate. The whole notion, the original BlackRock position was negative and bearish. The whole game was to get you to believe that the banking fraternity and the people that represent, that control the central banks and the main ownership of all the private banks that own the central banks, and the people that own them, all are anti this, so that you're definitely dealing with the liberty guys. You're sure as hell giving them, your enemies, a slap in the face by getting into crypto. You're going to show them. You're going to become your own central bank. Rah-de-rah-de-rah, fluff, BS. Satoshi Nakamoto, ba 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 ba. Fairy tales for adults, my friends. Crypto, as we've said, since 2016, was created to digitize money and to take away from potential people pouring money into gold and other assets as well, and so that they could bring the surveillance finance state towards you. That's right. By the way, status tokens are absolutely going to fly. So this is a sidebar of a mini rant while we talk on media. The status tokens are going to fly, and you know what? The status equities are flying. Who are your status equities? Let's see. Oh, let me just show you, seeing as we were bringing in a bit of equity stuff. Microsoft building server farms for Africa. Guess what? Your biometrics is going to be sitting on that. Your facial features, your social profile, your categorization, your personality type according to the things you post. AI bots running on what you're more likely to buy, do, when, how, etc. How you walk, your gait, your everything. That is all being farmed, collected, scooped, you name it. Pharmaceutical, blood types, biological information that could see them even offer a customary little virus that might take you down. Who knows? But let me tell you, they're not your friends. This is Apple, Google, Microsoft, Amazon, Meta, Tesla, and Nvidia. Kind of like a magnificent seven, if you will. Let's just show you the monthly chart on this lot of mongrels. Super stable, super climb. You're looking at a monthly chart here, and it is as steady as old rope. Don't forget you're on the log scale, so the degree that this has gone up is unheralded. But have a look at 2013, kind of the post subprime crisis, a bit flat. Don't forget it was very up before then on the individuals, but not all of them were around. This is low volatility, serious climbing. Now, during that period, you wouldn't have enjoyed that little dip wick and rally back up. You wouldn't have enjoyed the 2019 sell-off into the year 18 into 19. And of course, the events of the 22 bear market when equity and bonds both did so terribly. But apart from these events, this has been small fry, tiny little bit there in 21. This is small fry. This is a net climber, friends, and this is your statist, your group of statist equities. So what goes for The equities goes for the tokens. Nothing is new in this world, my friend. Statist absolutely prying, your devices that spy on you, that listen to you, your TV that has sound monitoring, recording, everything that's in your room, Alexa, etc., the Apple equivalents, Siri, you name it, voice recognition, all of these things are part of the surveillance finance mechanism. The S&P is not these few equities, my friends. The Russell is not doing near as well as these guys. These guys get money regardless if you're spending money with them. They get the military-industrial complex money. Both Amazon and Microsoft are servers to the military-industrial complex. We've called the military-industrial complex the FU portfolio of longs for ages. And we've included the tech-industrial complex, which have contracts with defense, government. In fact, all that debt that they can't afford to raise, that they're spending on defense, is being given to these companies. Microsoft, Amazon, you name it. The data Meta is scooping on you, you name it. The little, we goofed and 600 million people's data got leaked. And something bad happened. Yes, you name it. For those that are aware of the NVIDIA and the potential involvement with kind of rigging of data and all that corruption, all that thievery proves its status. The fact that nobody is investigating proves its status. Everything that is bent and crooked that you get away with is the Zio banking cartel. These are your Zio banking cartel equity tokens, and you should be invested in the Zio cartel crypto tokens too. They can be as corrupt, they can be as bent. I saw someone saying, but Ethereum this and Ethereum that, and some of the biggest scams, and Barry Silbert and this and that, and all grayscale, da. The bigger the scam, the more likely it's going to succeed. The scammers win. Microsoft should have been done for antitrust 2.5 decades ago. Google, YouTube, and Android on your device should have been done 2 decades ago. You wonder why they don't get done? Because it's handy to have just one company to call instead of 20 when you're trying to scrape people's data. This is reset speak that I'm giving you. These are equities that will continue to go higher. Let's just again remind you that on a regular scale, this is absolutely insane growth. Absolutely insane growth. Have a look at that. That is absolutely insane growth. Looks super volatile. Log scale it, and you can see actually this is stable stuff. And as the military-industrial complex has gone up, we also called the pharmaceutical complex up as it's part of the Zio control mechanism. Of course, Pfizer is an exception. We're currently short, but boy, we called it up before. Now we called it short. The legals, eventually some will get sacrificed, kind of like Monsanto, and will fail along the way and be acquired by another satanic corporation run by the Zio cartel. Anyway, so that's the reason why. Don't be afraid by statism in your token. It's more likely to succeed. The more inherently built it in. The more Vitalik is going to have your property on his Ethereum network and make you declare your own value. And if you under-declare it, someone can buy it in full off an NFT, a tokenized NFT, and own your property and turn you into a tenant in your own property, the better it's going to be. They want your stuff digitally represented. Everything you own, until you don't own it anymore, you rent it all. That's it. That's the game. That is where the Zionists are taking you, and be aware of that. So let's have a look at debt devaluation. Point number 3, as he squizzes at his notes to make sure he gets them in the right order this time. So the media, we haven't finished on media cycle. I went on rant. So media cycle, Binance, a settlement is in the offering. That's all you take from this. A settlement is in the offering. It seemed at one point they just wanted a break and do so much damage to Binance till they forced it into bankruptcy. Remember, all the Binance is going to go bankrupt. Binance is going to go down. The SEC was dragging them around, messing them around, forcing them to do this, that, and everything. They've now said, as a Zio cartel industry extracting businesses do, they've now stated their fee. So for not killing you, grabbing you because you crossed their lands in the good old Khazaria, because you ended up stumbling on these merchants and they caught you, and then almost killing you, and then putting you in so much fear, they've now named their outlandish price for your life to be spared, and that is Binance. They've now been given money. So it always comes down to money and extraction. It's taxation, it's fining for supposedly illegal being criminals by the ultimate criminals themselves. By the ultimate criminals themselves that have been given license to also be the police over smaller, lesser criminals. Somehow the extractors will go, and that is your SEC. Controlled, of course, that we're quite happy to talk to Sam Bankman-Fried and Gainsler, all pally-pally with the parents and all the chums and all of that fraud, actually working with a known fraud who stole money from most of us. That's right. So the media cycle is controlled by them. So how they do it is, first, all these other official banking cartels hate you, hate crypto, hate on crypto, so that we all think it's so independent. We're so doing what they don't want us to do. Yay, we're naughty little boys. We're backing, we're escaping the central banking cartel. And slowly you get BlackRock ETF, in Bitcoin, now it's going to be XRP and Ethereum as well. Suddenly they're all moving it in, and you realize, oh, they've become big friends suddenly, and they've turned. You've still got JP Morgan saying it's a pile of garbage. Don't worry, they'll turn it too. They're all at different times and paces. But by the time they've all turned, it's too late for the bull upside. You have to keep getting in and making money in the statist space that is crypto. It is totally designed to control and dominate you. Sorry if that's bad news. You're not getting your freedom. Privacy is the last thing they want. It is the absolute guaranteed thing that is going to hell in a handbag in all of this. Freedom is not coming. Communism is always their game. A technocratic global communism is their game. However, they control the media, and they've decided to start rewarming the vibe for Bitcoin, for the crypto space as a whole. So settlement is now all you can take from it. They now named their price. They're no longer killing you. They're now saying they're ransoming you. So it's a de-escalation. You're not about to be gutted and hung from the nearest tree. You've now got a price tag put on what you have to find to be finally set free from the violent, aggressive, most criminal cartel of extractors. Okay, 4 billion, and Zhao faces some suspended sentence. Fine. Warming of the media. BlackRock ETF, warming of the media. The news flow is supportive. So point number 2, the media turning on crypto. The media is turning on crypto. I was listening in CNN and saying how the whole blockchain was for buying AK-47s and snuff movies and illicit drugs like heroin and kidnapping and all of this stuff. That was crypto, was part of the dark web that went with, Pirate Bay. Okay, point number 3. The point number 3 is very, very interesting one. And it is the debt devaluation. Debt devaluation. So we need to leave the media and we need to go into debt devaluation. Now, what's been happening before we start jumping on any charts? You had the pension crisis in the UK. You had the bank failures of the US. You then had the Treasury failure a couple of weeks ago where there was insufficient cover on long-term debt. You've had lots of debt analysts coming out and saying how what a massive error it was that Treasury Janet Yellen, Granny Yoda, failed to put a much longer term debt, and she went 1 and 2 years because it's relatively a tiny bit cheaper when rates were so low. Now she has to refinance all that debt that's rolling over in 1 and 2 years time from 1 and 2 years ago at much higher rates. Interest rate payments are absolutely collapsing. So if you watch the market sniper side, we are in a parabola of debt issuance. We are spending significantly more on interest rate payments. We are getting significantly less in income. And as a result, the interest rate payments in the US alone is even larger than an overly flush debt defense budget is. So it's getting way out of hand. And you've got all that 1 and 2 year debt now coming back that was issued at a huge rate back then. Remember all the free money that people got during the events of, you name it, you know it, from March 2020, now bouncing back, now needs to go out at a much higher rate. So what you essentially have is someone who's been living above his means, earns 100 grand, spends 250 K, and has 5.5 million in debt. That's basically the US summarized. And now the interest rates on that 150 a year that they spend more than they earn now needs to keep being added at an ever greater rate to the 5.5. And now you're paying, instead of 0 point something, 0.5 on your interest, you're now paying 5.5 and 6% on your 5.5 million. Guess what? Anyone else would be bust. They are bust. The debt, devaluation, and the absence of bid by a lot of people under the market is finding that the turn that we called in the debt markets so long ago is indeed very much in, and that money is devaluing and debt devalues with it. So you don't have debt in something if you don't have money, and you don't have money if you don't have debt. So the debt markets, let's go again, US 30-year we'll start with, and the yield. You borrow money into existence, two things occur. The debt is created and the money is created. You don't do one without the other. And what's obviously happening is subprime cars, a lot of other things. Now, of course, everybody's saying, but interest rates are down. Well, we predicted this. We said after you run the 4.75, and in fact, you'll probably run 5. We called 5% on the 10-year. We'll show you that one as well. You get a pullback on rates. Well, that looks like a falling wedge. That looks like it's getting bid up a little bit. In time, this will be bouncing back up, just like you had a pullback here and further. So in short, debt can sometimes, and then people say, but why would the Fed increase rates? The market's hurting. They're starting to acknowledge that the unemployment numbers are growing. It ain't so red hot labor market anymore. It isn't so bright and breezy. Earnings on consumers stuff is coming down. They're starting to acknowledge that stuff. That is just to give you a small pullback in a cycle that since the lows have been going consistently up in yield, which means down in debt valuation. It is absolutely the seesaw. Look at this, guys. This is a new trend. You trade continuation in trends. Again, I've got it in log scale. Take a look at this in a regular scale. This is a new trend. You can see how strong it is. This is a pullback in a new bull market. That was a final capitulation low that occurred because they stopped the global economy, except of course the status companies, the Rockefeller stores that gave you coupons, so you have to spend those coupons only in their stores. Remember that. That's how he ran his business, by the way. You didn't get paid dollars. You got paid coupons, and you had to give their coupons back in his coupon store. And you couldn't get dollars for it. Yes, he pulled every trick in the book, and Amazon.com that had 2 decades of bottomless overdraft to build mega dominant positions. Let me tell you, I wish I could spend that amount on building a business without anybody ever asking when you're going to make a profit. So much so. So, yep, that is the Zionist realm, and that's where we are. Debt market pullback. Debt market pullback at the moment, yes. But longer term, it can be taken out the central banker's hands. What happens? People no longer accept debt as collateral. People no longer accept debt as a bid and something they want to buy. Pension funds start buying different assets because they're scared of how bust they are and that they won't meet commitments. They need things that go up in value. By the way, you can't even imagine how much value has been lost by the interest rate climb in this. It's not just the interest rate expense that's gone up, it's the value that's gone down. The value goes down. The value goes down. Chinese value bonds has gone down. They've lost value and they've stopped buying. And they've even selling. Guess what they are buying? They're buying gold. Yep, you betcha. They're buying gold. So what does that mean for treasuries as an instrument? A long period of disinterest, which will eventually lead to a melt up. No one will want to buy for any amount of money. That will see much lower bids. And what happens is the minute the valuation tips super low, the rates go super high. The seesaw and the fulcrum, that's how it works. So what happens is the market starts pricing much higher yields regardless of what the central bank is doing. The central bank, to avoid losing relevance, has to keep up with the market, or they have to buy the debt themselves and make a toxic bank and hold it up. That's what the Japanese is doing. It's called yield curve control, and they are walking away from it. Because what happens then? Well, if the debt doesn't devalue, the other reset valve is the currency. Guess what? The currency in the Japanese yen has absolutely collapsed. And we have covered that at great detail on the Market Sniper. Go and look at the one-way trade to short the yen and why yield curve control is the real reason that the yen has been the leader in loss of currency value. And now they are letting their rates climb up, but they're still miles behind the US. Same thing will happen in America, in Britain, in Europe, in all the other places. Why? Because too much debt, too much new debt, too high an interest rate expenditure. It is the pig, it's the cuckoo in the nest, leaving no space for the real value items. Who is that? That Trojan parasite? Same Zionist people. That's right, my friends. They have been pulling all of this on you, and they come out of this collapse richer than ever before, and you end up with nothing, and you'll wonder why. Sleight of hand, magician's trick. Anyway, the debt devaluation is the old donkey that is being killed, the huge old donkey. We've got a beautiful, fresh, mini little white pony, but it's got a much smaller white market cap running alongside it that wants to take over this huge load. This is your new, amazing digital financial system. Yes, oh, how excited we should be about what those same people have planned for us. What ends up happening is all of that debt has to get devalued, make it smaller, make the big dying donkey smaller and the weight on his back smaller, and pump up the horse till he meets and even exceeds the size of the old system. Then we can kill the old system and move all the weight onto the new fresh pony's back. That is what's happening. A transition, a parallel. Wasn't it convenient? We're going to be talking more about coincidences when we get to the next point. How convenient that there was this new little white horse that could grow bigger and bigger and be put on steroids and have a hyper move of increased valuation at a time when the main system needs to devalue and that money needs to escape somewhere else. Isn't that beautiful? It's perfect timing. It's almost like a relay race. It's kind of like that woman was waiting at the 100-meter mark to take the baton from me. You might be wondering, why is Francis running in a woman's race? Well, I've crossed the line. I've crossed the line, people. It's time. It's time to have the right profile in this world. I've crossed the line. I'm a super fast female sprinter nowadays. Anyway, let's get back to the next thing. Halving cycle. So we were talking about debt devaluation and the alternative market appreciation that absolutely has to occur, because the debt devaluation is also the money devaluation. You see, you borrow a dollar into existence. It's a T-bill. It's an asset. It's a liability. Debt is the liability. The asset is the dollar you hold in your hand that will buy you goods. You see that? You don't realize that there's always that part. Most money is digital. Most money is digital, and many of the dollars you hold in your hands is part of a loan you took, which you have an interest rate. Hence why we warn, get out of the interest rates. The dollar hyper super spike. Part of our hyper stagflation scenario is the central banks are forced to raise rates. Remember, Britain raised rates twice in a single day. If you don't, your currency collapse and the debt market collapse with it. That's what happened. If it's so bad, you went in too high the Deutsche Mark, everybody is shorting. You've got to stop the shorters from picking on you. You put the interest rates up for them to borrow. And of course, if there's no shorters, but everybody realizes no one's buying, they just sell the debt until there's no bid anymore. And you crash the ladder. Debt is an illusion. It's not worth anything that they tell you it is, especially when there's absolute trillions of fresh debt coming off the production line for new people to have to buy. Guess what? The central banks become the toxic bank. They monetize it. And guess what? Everybody says your currency deserves to go down. You are not worth what you say you are. You're buying a whole bunch of near to zero bonds. None of your balance sheets or assets, no matter how big the numbers, are worth anything that you say they are. And that is going to be the reinflation of the alternative system. That is crypto. That is reason number 3 why the absolute surge will come on crypto this time round. It is the reset and death of the debt and financial system that is going on, that is going to hypercharge the market cap increase in the crypto realm. That is why it's going to be huge. Some of you getting sweaty palms. Ooh, click, 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 leverage buy. No, no, no. More on that in a minute. So 4, we've got to talk about synchronization and the great coincidence. The great coincidence. Now, I was talking to the Black Swan guys, and they're awesome. And they actually noticed something I noticed myself. Let's go and take you into something. And they were commenting and even asking about this. And this is what we were discussing. We were discussing, you guessed it, good old Bitcoin. In fact, let's see, have we already got him up? Yep, we've already got him up. Let's get him up again. I want to get Bitcoin on Bitstamp to have the longest history. So what we were highlighting, let's also just clear the face a little bit. And I'm going to put the dollar index behind it. And what we need to highlight here is that the halving cycle, a great coincidence. Isn't it fascinating that this gentleman, this non-fantasy figure, this Santa Claus, this benevolent creator that disappeared without ever wanting to collect any of his money or any awards, went and designed an entire new financial system for all of you and says, that's it, lads, I'm done. I'll go into the ether, I'll disappear. My work is done and I am wherever I am, but I'm sure as hell not talking to you, and I've gone and I've disappeared, and that's all that you need to know. Well, I find that story a little bit of a difficult one to factor in. And isn't it interesting that he chose 4 years? 4 years halving cycle. Now, that happens to dovetail with the 4-year election cycle, for one. Kind of interesting. Why would you do that? Then it happens to, not only does it dovetail, by the way, as 4 years, but it's actually dovetailing with the change of a teleprompter reader in the United States. So you're actually going to have an election and you're going to have a new people. Now, I noticed, interestingly, that crises always seem to happen right at the tail end of one teleprompter reader's shift and drag on into the next. Kind of like, remember, George W. Bush and the 2008-29, and next thing you knew, you had Obama who had to clean up the Republicans' mess, and all of those good narratives and story. It always seems to work out that way. Now, what else about crises? You see, when you have a crisis, what we tend to do is we get both quantitative tightening before crises, kind of like now, interest rates higher for longer, although it's pausing and we're on the cusp of the new year. More of that in a minute. But yeah, kind of like, tightening and then pausing, and then suddenly we have crisis, geopolitical event, major. March 2020, there's this crazy virus. And by the way, it was leaked, we've now learned. And every variant that came after it was also leaked. Don't mention that. Well, mustn't say anymore. Oh, dear, get in trouble. So we don't want to say that. We will cut that segment out. Anyway, we got this event of March 2020. And during that event, everybody got locked down. And so there was a demand killing event. And then as a result of the flow of that was 2019 into March 20, we ended up with a collapse, sell-off, and then a major pump. Quantitative easing. Quantitative easing came to the fore, and suddenly we were in an environment where easy money prevailed. So if we have a look at since the 2000 and the beginning of crypto, now of course the Bitcoin Bitstamp only goes back to about 2012. Let's go, we need weekly rather. There we go. We got a low at 2012 and we've got the dollar index. Now I want to highlight a couple of things because the dollar's relative performance, in fact it's easier maybe, let's just make this a monthly. That's a bit much. Fortnightly. Such a little tinkler. Okay. So we've highlighted before, we've only got since 2012, but here you have from 2012 to 2014, a major bull market in crypto. During this period, largely, small amount up, but largely flat on the dollar. Till around here. Kind of got really low vol. There was a bit of a falling wedge there. What happened? That was your high. You had a little bit of a pause. Then you got dollar strength. So during this period, dollar was largely range bound. It had dollar index largely range bound. And it started a major bull market round about from here. It started, that was its first big candle, went sideways and then pumped. That's the dollar. What happened to Bitcoin during that period? Down. Bitcoin down, dollar up. We've gone through this quite lengthy. Here you have a lengthy broadening period for the dollar and then a weakness right down to here. So this whole period from this point was largely sideways, a little bit higher at that one point and then down. So sideways and down. That was your journey. What happened to Bitcoin during that period? Sideways and up. Then when we got to this point, roughly at the cusp of 2018, we largely went up on the dollar, down, 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 down on Bitcoin. Then we went sideways on the dollar. During that period, we had a half bull. So sideways dollar and down dollar, generally bullish for Bitcoin. Then we had a bit of a rally in the dollar into the high here. And what did you have at the same time? The collapse that was the events of March 2020. Then after the promise to print, these are under each other, by the way. So after the promise to print, the dollar went hugely down. It took 7 trillion. Imagine what trillion they're going to do next time. Oh dear, oh dear. It might not even be QE. It'll just be a new system inflated up. Who knows what form will do. What did the Bitcoin do? Into 64, which I think is the real technical high. 69 was a marginally higher high. It was already losing value against gold. It was a lower high against gold, a lower high against tech, a lower high against many others. That ended up being a kind of a top. You had one more dip, which allowed the 69 run. And then you had a huge bull market, the dollar. What did you get? Huge bear market, the crypto. Bitcoin particularly. And since then, we've then had a correction down. Crypto was kept down with very bearish media. So if we go from the absolute top of the dollar, there was crypto was kept down a bit longer before it was allowed to get up. Since then, we've had dollar weakness. And that allowed this to inflate up. And then we had our possible head and shoulder and relative weakness period for Bitcoin, where it was quite slow to get away on its head and shoulder, and that was all during a dollar appreciation period. So we were you can see that when dollar is strong, it's not supportive for crypto. So what we can see from this is that it's synchronized dollar strength and Bitcoin weakness, and dollar sideways or weakness and Bitcoin strength. Now that's one thing, but there's also a cycle that goes with it. There's also a cycle with it that seems always we go into a major quantitative easing period just about when Bitcoin has to do well. So 2009, when Bitcoin was released, essentially we had non-stop QE all the way through 09, 10, 11, 12, 13, all the way deep into 14. And that took Bitcoin from something that was a fraction of an amount of money to, there we go, what was its high? Around $1,163. That was well ahead of what, no, I'm not sure that's correct. Gold was probably just above that during that period. But very soon thereafter, Bitcoin has overtaken gold and been higher by valuation on gold. Now let's go have a look with this halving cycle, how amazing it is. In fact, let me tell you a story. 2019, wary of the major repo market concerns, traditional market concerns, by the way, repo markets, September, October, real issues with the repo market in both the dollar and the banking system. So there was a real concern. They desperately needed to be able to do quantitative easing for banks and give them some money. That was 2019, September. Guess where I was? I came back to South Africa. I sat with friends. I watched the Springboks in 2019 shock the world and win the Rugby World Cup, while warning everybody that this new narrative that was coming out about you guessed it, a sickness we may not mention, but it was a flu, that they should not, and what would come, they should not, and everything that went with that. I was doing all of those things, and it had just started to go wrong, November 2019, just in time for the halving year 2020, 40-year cycle. So it was 12, it was 16, it was 20, and it happens to synchronize with the presidential cycle, which is always when they like bombs to go off near the end of one guy's term into the beginning, so the other guy can say, look, plausible deniability, I'm having to clean someone else's mess up. So that's your halving cycle, chosen with a presidential cycle. And you often get this quantitative easing that came after March 2020. Lots of money pumped into the system. Inflame. Here you go. You drifted up, and then the QE came up. Major bull market. How interesting is it that that's been done in that way? And as I was highlighting, the Black Swan guys were also pointing this out, and we were discussing it. So then I went to the one thing that is different, and this is point number 5. So we're going to get into a little bit of point number 5 as well here. Before I do that, I'm going to minimize the Bitcoin, and I'm going to show everybody the macro yield curve inversions. Now, yield curve inversions got to do with debt. It's got to do with debt, and debt as a major signal for failure in the financial markets. And it's a real problem when this happens. Now, a lot of people, I don't understand debt markets. I don't want to know. I'd rather not think about it. Well, it's probably the most dominant thing. Now, since Bitcoin's existence from 2009, there literally hasn't been a full, proper yield curve inversion. The one thing that is absolutely going to drive this market belter mad, point number 5, last but not least, in my opinion, is the fact that it's going to have the full force of a yield curve inversion. This is Bitcoin's lifespan. Now, I'm not going to say it didn't have absolutely no inversion, because you kind of, for the events of March 2020, which we may not say the name, you had a very, very tiny little warning, and then next thing you know, you got that. And that was unbelievable. It was extreme. And what comes next has to be more extreme, because this managed to be more extreme than that, which was a pretty extreme set of events. But this was in terms of the QE. And it's not just the 7 trillion, because only some of that went to people. A lot of it went to boondoggle things that Democrats support, like the Kennedy Foundation, and Republican support like this for promoting the gender that I've just transitioned to, and various other things such as that. So a lot of those things got funded. The cultural subversion that is specifically being driven by a certain group of people. And we ended up with this extreme amount that was sent to banks. The amounts that no one is talking about, the 20+ trillion that was sent to not only American banks, but European banks. Remember the repo problem of 2019. Well, friends, keeping that old boondoggle going, wow, that was expensive. Guess what? It's going to happen in even greater spades now. This is the single largest inversion in yield inversion that has happened since the 80s. You'll have to go early half of the 1st century to see a greater yield curve inversion. I think it'll be 60s or 70s maybe, and possibly even sooner. I'm not sure if we've actually got that amount of history here. We don't. So literally from the 89, 90, 87s, don't forget you had the huge gold run that went with the Volcker interest rate spikes, etc., where he tamed inflation after the stagflation of the Vietnam War and Nixon, etc. Now you are getting this huge inversion. And as we've warned, it has shown some degree of wanting to correct, because the problem hits you in the red box, not in the orange box. It's a leading indicator. You'll be early on it, and it's okay. But you'll be warned, and there is something coming. But now, as the rates pull back, because it made targets, you're getting a slight pullback. The triggering event is the 0%, and then you wait. And then it could be in 3 weeks, could be in 3 months. But certainly you'll get your story. And we've got so many reasons, from all the old world stuff, debt, finances, banks, everything. And they are going to want to confuse you, so you can expect huge geopolitical events, like the casual genocide of an entire nation in the Middle East, like that extending into Iran, Lebanon, and everyone else that they would like to slaughter, etc. So, and other geopolitical events that will designed to confuse you, distract you, etc., from the fact that this financial event will trigger at some point, because normalization will occur. You pay more to borrow long than you do to borrow short. It's been a history of the world since forever, and it makes absolute sense. And this anomaly will correct. And post that correction, you are now on borrowed time for when big things start to go wrong. And when those big things start to go wrong, either the QE will be absolutely immense, or the entire system is taken down, and you will get this hyperinflation in the crypto market. So let's have a look at Bitcoin now in this relationship. And let's have a look just to this last bit here. So we're going to drop down to the weekly elements, and we're going to highlight a few things for you. So during the events, initially, as they started to break, we had a warning. We didn't quite touch here. 2018 was a dodgy year. We were continually playing on the boundary. Bang. You started in August 19. That was your repo markets issue. And boy, it didn't serve crypto well. So let's just show you that. We had an inverted HVF there. Got an inverted there. And this started literally as I've described. The late August into September repo markets travails. And then eventually that was the event where it was all announced, March 2020. They broke cover with their plan. That's what happened to crypto. Huge dip. So here's, let's draw this again for you so that you can see the coincidences, how it all rolled into this bull market, fractal bull market. It wasn't a full bull. Then the events occurred, the planned event occurred. That was actually a pullback market during that period. So it was already in some degree of pullback. Just before it occurred, you got a little fake out the wrong way. Hey, it's the bull season. Woohoo! Bull season. Fake out. Get the retail guys running in long. And then you got the mega collapse. Let's do it in red. And that was the mega collapse, which was so devastating to so many people. And it stopped many people from benefiting from the bull market. Remember, a shakeout to the upside to get you in, and then a major collapse to crush you, so that you don't make the money on the upside. The goal is you don't make the money on the upside. The people that say you will be happy and own nothing don't intend for you to be wealthy. They need to expand this market to make it huge, to replace the debt market that's contracting to zero, one expects. But they need to do it to make themselves rich and for you to be completely ward of state that they control you. And it doesn't help if you get rich too. So the game is to shake you out. First a little bit of bullishness, crush them. Then the bull market came. This is exactly it. And here it comes again. Now you see this fractal in a new light. New bull. New bull. And what came next in this fractal? First the flush out, the red. And this is the final part of the video. You could face such extreme events that you could be looking at a flush out before you go up. And I want to highlight on the yield curve inversion. When the yield curve was initially normalizing, Bitcoin got to go up. Let me choose the right color. So first it came down in coordination with that. Then yield curve normalization. after the event and the dip. So that whole part of it, normalization, was the bull market. From when yield curve peaked back in normal land, you made the 64k figurative high, literally. Since then, the perversion of the yield curve has been associated with bearishness. Now, you did get a rally, and that gave you your 69, but this was already an early leading indicator that you were heading down. And I've said to you, Bitcoin against gold, Bitcoin against tech. Again, these secondary highs were all lower, to show that this was a late echo bull with all of retail storming in because it was doing so well near the top. That was non-stop, the perversion of the yield curve, all bearish for you. All bearish for you. When you were going sideways here, you started to get a little bit of bullishness. But it's not going to be good. If you break back up, the crisis is coming. Initially, it will be bullish, and then you'll get these red lines hit, much like this fractal. It happened the year before. And by the way, it's the only two times in Bitcoin's history that you had associated yield curve inversions. The events of March 2020, here, yield curve inversion, and a major collapse. Then your bull market. You're now in a yield curve inversion. You are essentially in a bigger version. This entire fractal, this is why I say this will be the biggest crypto move. Listen up, guys. This is the important part of the video. It really, really is. The guys that have stayed this long deserve to get the real gifts. This was a minor inversion. This is a minor inversion, and that's your minor fractal that you got. And then your bull market. This is a much bigger version of the one before it, of that one. And in the same way, this inversion is much bigger. Everything by scale is much, much bigger than the events of, yes, you guessed it, March 2020, which were huge. The 7 trillion that got put in the market, and all the other things that, even to banks, who knows what the banks did it? They may have also, who knows if they were involved, what they did with the money. But that normalization of the yield curve gave you your bull market. It called the top once it started. It called the top. The debt markets started to go stale. Too much debt out there, too much concern for the economy. It started turning down. It's dipped far lower, far bigger. This entire fractal here is a far bigger version of this. That means every aspect of it could be bigger. Every aspect of it could be, including the bull run, here, which you need to survive to. However, the green, the pink, the blue, the red. The green, yes, we've done it. The 4 bull, the bear, the pink, yes, we've done it. The shakeout rally, here, yes, it's there. Now, this is only one place where I'm losing a little bit of initiative or fuzz. Shakeout rally. So we all chase in. It's all bull. Go, go, go. Don't be left behind. This is it. This is it. The event. Now we're talking about event. And we've referred to it as a demand-destroying event. And that's the one thing I haven't put in here. And I must put in a circle and make it nice and fat. The event. The event. And we are waiting for the event. And some people will say, but that's keeping you out of a bull market. It is keeping you out of a bull market if you're leveraged. If you are investment and you're okay to take the dump, and you aren't going to be a forced seller. And here's my concern for many of you that think that you're in that position and you won't be a forced seller. If I took every cent out of your bank, because that kills the debt, you've got to remember money and its shadow. There's a light, there's a sun, there's a human, and there's a shadow. The money gets borrowed into existence, the shadow immediately exists. It's the asset and the liability. Debt is the shadow to your money system. If you lose all your deposits and all the money you hold in banks, the money goes, so does the shadow. What is the shadow? It's the debt. We have a debt problem. How ideal would it be for a global hack done by China, done by North Korea, done by Russia, done by a coordinated axis of China, Russia, and all of them? We need war. We need more war. We must bomb them. They've done these evil things. That's absolute clear. Only thing that we can do, says Newland, says Benjamin Netanyahu, says all the usual you-know-whos. And as a result, you lose your money. You lose your money, and then the reflation of the crypto market takes place for the corporations, the status corporations, the ETFs, who surprisingly don't lose their money. It's mainly a retail phenomenon in certain banks. Who knows? Or interest rate spike. Interest rate spike, that breaks the 0%. We break it violently to the upside because of debt devaluation. Everyone who's borrowed can't pay. So loans are destroyed and they take positive balances from people. You think that won't happen? It happened in Cyprus. They give a haircut and a bail-in. Hey, he couldn't pay his loan. The people that have the money have to share some of the pain. We're all in this together. We're all in this together as a banking cartel. Remember, when there's problems, we're in this together. Solidarity, it's the communistic phrase. We're all in this together. We all suffer together. But when they have bonuses, you don't get sent a check. No, doesn't work like that. Remember that. Remember, that's how they steal. That is how they steal. The same people, same trick, and you aren't part of that club. And they aim to steal from you. They aim to appreciate into a multi-billion industry their new digital money system. And they need to do it violently. But they need you not to be involved, because then you become rich. And then you don't care about their rules and their laws. You buy a big piece of land and you live entirely sovereign. And you don't give a hell for government or anything else. You're self-determined. No, we don't want that. You need to be happy on happy pills and drugs and terminated when they want to terminate you, and own nothing and renting and paying rent on everything you own. And there must be an NFT token that can be bought online to dispossess you of it. For someone who's been printed up gazillions of those tokens while your dollars got converted, your meager dollar balance got converted into your allowance on a conversion rate. That is how it goes. That is how it goes. And point number one of the dangers that will put you on the side is that you are not seeing the potential for them to shake you out. And staying only investment and not being leveraged may not be enough, because if you don't have cash, if you don't have other money substitutes such as gold that can be accepted for other payments, because they will keep chaos for 6 months. If you couldn't pay, if you lost all your money in the bank for 6 months and somehow the owings were still owed and food was still needed, how would you pay? How would you pay? They only need to keep your head under the water for 6 months and you're drowning. That's the literal half minute waterboarding, and you're drowning. You do, and you sign whatever's put in front of you, and you watch them reinflate this thing with all QE, and they can just make it like that, 100 trillion market cap, and you never experienced any of it. So that is the great risk. This is the great risk. The shakeout, the possibility of a shakeout of a demand-destroying event. And that's not to keep you out of the crypto market. Sure, be investment, but make sure you've got money in notes on you, cash equivalents, you have no exposure to debt or interest rates on the wrong side in any way, and you forward paid everything you need to live for 6 months. You owe nobody, and you have food supply, meat, veg, greens, self-reliance, power, and electricity, because all these things can go crazy in price, and you've got to be able to carry on for 6 months. I don't think it'll be as long as 6 months, but I think if you can plan to be good to go to live for 6 months without internet, Wi-Fi, mobile access, all of those things. I'm not saying they won't be there. I'm just saying, what if? But I don't know the nature of the strike or the attack. Stay in the game will be the game. Then you can sit in your investment crypto and not worry about needing to sell it. And then you'll get reinflated up substantially when the big bull comes, which will make this bull look small. So this entire event of this yield inversion, which is a far bigger pattern-based event in my view, it could be, on balance of probabilities, there's a real possibility. So let's just say that again. This whole thing here is a potential macro version of the fractal event that went before it. That is the only other time you got a yield curve inversion. It happened there, it came back up, and then the event. So from the yield inversion, that's the yield inversion, there's the event in orange, and then the reinflation. You have to survive this moment, this period. Here's the brackets. Yield inversion. I'm going to go E rather. It's IE, we're sure, but yeah, let's write it all down. Yield inversion. Inv, and then event. And we're definitely got umpteen ways that the events can come at us. And it's probably going to involve conflict. It's probably going to involve chaos, a lot of distraction, etc. So you've got to get through this period without needing to sell. And I can't tell you what's going to be involved any more than I could tell you before it happened what was going to happen 19 into March 2020. But once they'd chosen their card, I knew I knew all the details. So you have to avoid the shakeout, and then you'll be able to participate in what I expect will be the largest. As many times as this bull was bigger than that mini green period, is how large the next up leg I would expect to be proportionately. In short, that which comes here will be potentially epic, and it will represent for me as many times bigger that is to this will represent bigger than that, and that is the trap, because they need 100 trillion plus, quite probably a couple of quadrillion, to be honest, but at least 100 trillion market cap in the new digital assets. Of course, central bank digital tokens will make up some of that market cap. Things you haven't even heard of will be released over all of a sudden and a quickness, with biometrics and a whole bunch of tech that have clearly been integrated and tested for a long time, as they knew this was coming. How did they know? Ooh, who will know? You don't ask naughty questions. You're an anti-Semite. So all of that is going to come. Watch out for that green bull market. That is going to do you just great. You have to survive to make it. So you've just heard from me. 5 reasons. Book a call below, by the way, while we'll be watching it on the top of the link. We'll be following all through this. Reset is coming. We specialize on focusing and building reset wealth that you can hold throughout, and the strategizing for that. And you need to. This is not typical financial advice. It's not advice at all, but it's a typical financial advisor is not prepared to deal with what is coming in any way in terms of that. And they would put you in debt instruments, pensions. I've been guys saying, oh, I'm putting more money in their pensions. I'm like, no. Your public pensions, it's not even like self-invested pensions. It's like government pensions. I'm putting in more, I'm making sure I've allowed. No, don't do it. Don't do it. They're going into bonds. You are the bid in the bond market that needs to collapse. You are a bag holder. If you are in an opaque pension that you do not control the outcomes of going in, it's almost certainly the pension fund managers are almost certainly wading in and being the dumb money bid in the failing debt market, because they have to pay future flows from a lump sum today. Do not be part of that. Okay, guys, you've heard 5 reasons. The associated equities are reversing. That is why we're going up. it is showing, and it's also the equity market is approving of it. It's not just a crypto phenomenon. So those that have been arrived, we covered MicroStrategy, we covered Coinbase, and we gave you targets for those. Go check the beginning if you need to see them again. Those equities are turning, and even Coinbase looks like it might pop soon. What else have we discovered? Point number 2, the media cycle. It's absolutely turned. The guys that were the controlled opposition, oh, it's garbage, now seeing 1 or 2 people turn and pivot, and settlement for Binance coming. Okay, guess what? They've given up on killing it. They're now going to ransom it. That's the cycle. That's a positive step, believe it or not. Then the halving cycle, and how it's perfectly synchronized with quantitative easing and the presidential cycle. Isn't that amazing? Isn't it amazing? What a coincidence, I would think. A coincidence, you know. Satoshi thought of everything, the election cycle, and when quantitative easing might come, or maybe it's just planned that way. And then the yield curve. The yield curve reversal. So we've gone from 4 to 5. The yield curve reversal, we've just given you rhyme and verse, fractalization of what happened last time. A mini bull run, a mini bear run, a final rally to get you in, a major flush out. That's the red here on a event-based news, and then the big bull. The big bull doesn't come without the event flush out. Why does he say that? Why does it have to happen? Because the jet fuel for the bull, every time, as we've shown, has been a proliferation of dollars on a quantitative easing cycle. From 2009, you got nothing but quantitative easing, and in the events recently, you get quantitative easing to push it up to 64,000. 7 trillion of money was thrown, and not to mention the 20 trillion to the banks. So it is quite likely that you will need the event before you get the easing. It makes sense. Can you not see this? It makes sense. So a shakeout out of the current blue rally that you are getting here, that has been kind of a little bit okay. You know, you're 15K now and you're 37 there. It's taken a long old time. Got up to 30K, then you came back to the 25 over here. It's very much in the category of the wash everyone in soft rally before the real dip event. You could be buyers if you had money, but you've got to be careful where that money is. If it's in a bank, could be a problem. If it's on an exchange, could be hacked, could be a problem. Where do you put it? It's difficult one. Cash notes is good, but you got to take it in and out the system. It's kind of messy. So you got to think about this. There's many points of failure here. The flush out, and then the next bull market comes. And this is going to likely be more like this fractal than any other bull market before it. Why? Because you have a yield curve inversion signaling a major economic crash event which is going to destroy debt, and an alternative asset class is going to be required that is associated to money. I wonder what that would be. Do you get it? It's crypto. It's Bitcoin. It's all of them. But you need to understand, they don't want you to make the money. They want you to accept it as money, but they don't want you to have too much of it. Okay, I'm the market sniper. I'm the crypto sniper. You heard from the crypto sniper today. Don't forget to like and share. This is what's going down. All these funny little cycle coincidences. You must decide if you want to be with us during the course of this process. These are the dangers. These are the gifts. This is how it comes. The smart survive, not the stupid, not the brave. You need to be brave and smart, and that's really important. Wealth building in reset times is not for the faint-hearted. Please like and share. We get hammered for the things we say. Some of our truth doesn't ring so great with the YouTube algorithm, so we appreciate the shares. Thanks for watching, and we'll see you again later. Bye for now.